Howdy folks, welcome back. This is the daily upload for August 4th, 2020 for the ICT Mentorship. Before I begin, just so you guys know, I have thought about doing this for a while, and I was going to do it at the end of the year, but it's becoming a distraction, and I have a lot of things I want to get done with you all in the mentorship, so I have removed my Instagram because it's a distraction, and everyone I wanted to call out over there never really stepped forward, so I'm content in that. The Twitter is obviously another distraction, so if I feel the impulse to share things, I will be doing it in our forum, and should I do that, I will create an area where you guys can go and see that as well. So don't be alarmed, everything is as it should be here, but just keeping my focus more aligned with the mentorship and where we're going, because I want to make sure I deliver everything on a timely basis and get the lessons done by the end of December of next year. So we are looking at the dollar index on the left hand side. We're starting with an hourly chart. Everything else is still basically the same from the daily. We are looking at sideways consolidation, and that's what we're getting here. And whenever we go into sideways consolidation or range bound environments, you're going to be focusing on looking for liquidity runs below lows and above highs, and just staying within a defined range. And on the dollar index, you can see we traded down to a fair value gap in here. We had an initial drop after midnight last night, then drove it up into consequent encroachment of the fair value gap here. So we have a failure swing, optimal trade entry there. And we broke down, trade consequent encroachment of the fair value gap right there. So nice little move initially to here and then back down in. So as a range trader, okay, if you're not comfortable with this type of trading, it's probably better if you just study it and observe what has happened and try not to be nimble, because it's something you have to acquire over time. Okay, you can see, and we have the 2 o'clock in the morning as the European opening price. We trade down below it and then send it higher above the opening price, clearing buy side liquidity, 93.60. See that level here? 93.60, 10, 20 pips above it. Look at the bodies respecting consequent encroachment. All of this range from here, in other words, this high down to this low, we trade up into a premium here, and then we distribute price back down into the fair value gap in here and below the relative equal lows. What's the signature here? The higher low to the right than this. So we have a very easy low resistance liquidity run idea there. Fair value gap, bearish order block, really nice there for a New York session run into the relative equal lows. That's going to be a long for foreign currency. Moving on into euro dollar, you can see we had price trade up into and touch the fair value gap discount end of the range. Trades down into a closure of the fair value gap that exists in here and order block. Nice respect there, and price sends it. And then we're going to probably trade up into this level here. If we do trade lower on dollar and higher on euro, take your attention to this area right up here. I'm just going to put a little rectangle on for your study. Okay, and I'll just save that so it's always in my chart now. So we'll be looking for that, as also takes us up into a premium there. Do we continue higher? I don't know. Keeping my hands still. I'm trying not to do too much right now. You guys saw me do a euro dollar trade. I'm going to show you that now. But the idea was trading into this fair value gap. We'll drop down into a 15-minute time frame. Alrighty, and it scrunches up a little bit more. There we are. Alright, so overnight, let me put a daily divider. Okay, so we have a initial Judas swing here. Price comes back down, rebalances within that hourly fair value gap. It doesn't look like a fair value gap here on a 15-minute time frame, but you obviously saw on the hourly chart it was. So what I was looking for during the New York session today was I wanted to go short in this consolidation and expectation trading down into this level here. Now, this fair value gap is defined on the hourly chart, and that low comes in at 117.33 and a half. So if we give 2 pips, 3 pips spread to that, you can see why I was showing you, or sharing rather, what the take profit was on that trade. So we're going to break this down and look at a smaller time frame, 5-minute chart, and then we'll drop into a 1-minute chart and you can see it. Alright. Okay, so ahead of the New York session, we have price trading in to this fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. Price trades up into that and then expands lower. And then right in here, you're going to see a small 1-minute institutional order flow entry drill. Okay, and you can see that little box is right there. It's going to be a micro optimal trade entry and fair value gap. Okay, so here's the 1-minute chart. You can see price trades lower, comes back up into this fair value gap right there. Now I'm going to take that box off so you can see. Right in here, it trades up into the fair value gap. There, blink. And then heavy distribution. And then one more time, institutional order flow entry drill right in here, and then sells off into the fair value gap. Now obviously I don't have in that chart on Twitter that I shared today, but you probably can't see anymore because I scrubbed the video, and all the tweets are actually being deleted going back. It's a slow process, but I just want to get rid of all of that and remove my presence from Twitter. Now I'll keep the account open online because I know someone will jump on that like they've done in the past. So I'm going to just leave it at that. There won't be any kind of information whatsoever, just be a placeholder. But the institutional order flow entry drill technique here and up in here, both looking for that fair value gap. I talked about this morning, if you're looking for a trade, and I like to look for trades that frame at least a 15 pip likelihood or objective, and that way I can scale off something. And now I've taught today on Twitter was taking 5 pips off of every trade. If you do that 5 times a week, that's 25 pips net. So while that still doesn't guarantee a net return for the week, but it's a good practice to get into. I typically do it with a 10 pip because I'm in there with very, very short term 1-minute, 5-minute charts a lot. And so if I get 10 pips, I'm taking something off. And I just want to do that consistently. If you do that over a period of a week and you do a lot of exercise, you can clearly see how fast 150, 200 pips are potentially available if you're extremely frequent and busy with your exercises. But it's not an enticement for you to expect that as a steady diet. And you can see how we traded down to the fair value gap, worked the levels, relative equal lows, runs that, then sends it up, support at the premium end of the fair value gap, optimal trade entry. You know, so you see fair value gap right there. Boop. Bullish order block. Woo. There you go. You like that sound effect? You like that? And then the price sends it up a little bit higher, and then we are now sitting in very, very late session trading, which is very thin. Okay, so that's the business there. And we're going to look at GBP. Okay, and this is a 15-minute time frame. You can see that we had buy sell liquidity, runs up into that old breaker again. Price trades lower, creates a fair value gap in here, trades up into it ahead of the New York session, displacement, and runs almost to the lower end of the fair value gap on the daily chart. Doesn't go ahead and get down to it, but very impressive nonetheless. And then we have the New York session market reversal profile that took place in the New York session, or New York Open. And now we're just consolidating in here. So I want to see if we have a willingness to get above these relative equal highs, because that's the next short-term draw on liquidity, and then this small little fair value gap there with the bearish order block. Do we get above 131.10 and failure to go higher on dollar and dollar goes lower? That's what I'm waiting to see, and I'm trying not to get too excited about it. Not really expecting to do a whole lot this week, but we do have somewhat of a market maker buy model. It's a little sloppy. I don't like the formation that we have in here. I just don't like the structure here, so you have to be careful. Watch also in here, we have a little bit of a imbalance that may want to be an upside objective as well. So watch that 130.90 and 130.85 level, clearing up all this in here. That low comes in at 82, so it could be 130.85, 130.80 from where we are here, and then what we do at that point and how we trade there will be important as the rest of the week may do. Clearly, I'm keeping my hands underneath my seat, sitting on them, trying not to do too much this week. And if I can find another opportunity before Friday, I will obviously try to do that, but it will have to be in the scope of the videos. Okay, so I will catch up with you again tomorrow in the midweek review. Until then, I wish good luck and good trading.